There's been a recurring theme this week in the markets of write-downs. One of them was Leighton. The biggest, in fact, was Leighton Holdings cutting its guidance back by up to another $250 million. Here's CEO Hamish Tyrwhitt.
Obviously, this is a very disappointing call to make, and I'd like to start by apologising to shareholders for the bad news that we're going to be delivering.
Of course, the theme, one of the themes is that he's a new CEO. He's coming in, clearing the decks. I mean, they always do it. To what extent is that the case, and to what extent is there a real problem here that they haven't faced up to in the past?
Well, this is the second time in 6 weeks that he's clearing the decks. You know, you do it once, you do it big and you get rid of it. I think the issue is it's going to be really hard for shareholders to believe what he says now, because only 6 weeks ago he was saying, done my due diligence, this is the write-down, this is the final write-down we're going to have. And then again last week, he came out and said, OK, I think now we're at the end of our write-downs. So
that's the problem, isn't it? This time it's to do with with Hamish's credibility, not Wal King's credibility.
No, I think you're getting it wrong. I think it's to do with the nature of the business, and we're all giving it a blue chip status, Leighton Holdings. But the truth is they have these black box projects that no analyst can really work out how they're going, and even probably the management. And they are prone, like a insurance company in Queensland, they're prone to disaster occasionally, and that's what's happening. So analysts have to take it on faith what's happening in these boxes, in these projects. And that means you have to have faith in the management. And the management don't deserve it.
The disconcerting thing about this,
they don't know what's going on.
The two big projects, which have now cost them, I don't know, $1 billion, Airport Link in Brisbane and the desal plant in Victoria, and those are both almost complete. They're sort of 95% plus complete. And when you get projects at that stage, you shouldn't have another $250 million of losses suddenly just emerge. And so I think that's the issue that markets have with that company. But how can you trust their ability to understand what's going on in their own projects?
The share price has been absolutely hammered, hasn't it? Because I've got a little graph of the share price here, which you can see. It used to be $60.
Yeah, no. What that shows you is that Leighton's used to be a blue chip, you know, and that implies all sorts of elements of quality, reliability, and sustainability of earnings, and they're not delivering, and so it's lost. It's now a trading stock. You trade it for the good times. I wouldn't be buying it now, not with 6 months to go or 3 months to go on a couple of these big projects.
Can they ever get back their blue chip status, do you think, Nabila?
Well, I think they've got a bit of work to do. The thing is, this is a company that should be really benefiting from the mining boom. You know, all the infrastructure projects and all of that. They shouldn't be losing their blue chip status at all. But now that they have, I think it's going to take a long time for them to work their way back up towards it. And I think even for Hamish to work out what's actually happening in the company and maybe change the way they do business, and some of the bids they put in for contracts. Clearly, it's maybe they're underbidding to get the job, but then finding out they can't actually meet their costs.
But from an investor's point of view, they're a little bit capital constrained. They've got quite a low yield, 5.5%, 50% franked. That keeps income investors out, and they're selling assets to raise capital to get gearing down. You know, they haven't got a lot of growth options.